Hello guys, and welcome to today's training. Though today we won't be doing much. I just want to show you one easy method you can use to scalp. It's very easy, but you have to be glued to your system. So when you're glued to your system, when I say glue, that means you should be observing your system all the time for this signal. I just want to share it for those who will love to test it out. But mind you, you need to be very observant before you take the signals, and make sure what I'm going to explain in this video, it is very clear to you. That is, you try it out on your practice account before you try it on your live account. You know, I told you that synthetic indices are the easiest to trade. That is, if you have time to observe and do the right thing, definitely you see result. But if you don't, then you see the other side of it. So today is the Fibonacci stroke resistance area stroke imbalance. Let me take you to, I think I took it on, though the live account has entered in profit, but that of the one in practice account, I just inserted area of TP. I think for the boom 1000. Okay, let me show you what I want to show you there. Now, this is the strategy. Let me zoom it out a bit for you to see. I'm using the Fibo level, and the Fibo area of the Fibo level interested in this is the 0.0 and area of 23.6. Let me show you where I'm telling you. Talking about this area here, the 0.0 and the area of 23.6 for down and for up. When you see it at the upside, always observe it. When you see it at the downside, always observe it. Then the second thing again is observe your area of support and resistance. Now, before I will take this signal, let me tell you what I normally do. In my 1 hour time frame, you can use it for any time frame, but I like using it for majorly 1 hour. Now, in my 1 hour time frame, when price is dropping on any pair, be it any pair, I want to see it close on bullish. That is, I want to take a buy. I want to see price close on bullish. Immediately close on bullish, that means on buy. I will take my buy, put my TP at the close point of the 23.6. Is for scalping. You can extend if your signal, if it meets up signals accurately, you can extend it. But sometimes what it implies is it might just be a little pullback. So if you don't understand all, you can use this method. One, I want to see price once immediately this candle close bullish, right? I want it to close first. Immediately it close, I will open a buy, then put my TP close to 23.6. I think I've tried it several times, and all, not majority, all was on profit. All, especially on the higher time frame. It usually happens on the 5-minute time frame too, even the 15-minute time frame. But wait for an opposite candle to drop. That means if it is bullish now, wait for a red candle to drop before you take a sell. Then when you take your sell, highlight the area 23.6 as your exit for quick scalping. It works very well. So if you have been trying others or you don't understand, you can just try it out once and you let me know what your response is. But make sure you practice on your practice account first. So I've tried it times without number, it worked, so I now decide to take it on live trade. It's just a sign of reversal. Sometimes the reversal might be long, sometimes it is not longer. So that's why I said it's better you use higher time frame. And the other thing is, what you will notice is this: there's usually an imbalance. That means when it's coming, it must have created an imbalance. It's coming to either retest a particular zone. Like this one now, definitely is coming to this area, this support level 2 of the pivot indicator. That is where it's coming, or it can also extend up to the boom of the bottom of range, trading range. But in all, this is my, anytime I see it, I don't exit. I don't, except maybe I have a plan for that particular pair before. So when it close like this, I will now go to a lower time frame, then expect the normal reversal for my it I want to take buy. So I want to see if price do break a structure, retest that structure, then I'll now execute buy. But for my scalping method, sure scalping method, this is it. Once price hits 0.00, it can extend. So that's why I said you should always wait for the reversal candle to close. So when the reversal candle close, that gives you a full assurance that the price will definitely come here. So it can come here before it decide to move on the opposite direction, but definitely it usually work for me. It usually works for me. So that is the Fibonacci scalping method I want to show you guys. You can try it out, and if you enjoy it, then you can add it to your arsenal as method of trading. So it does not mean that it's just a guesswork. It's not a guesswork. It is a sign of reversal for trend. When you see it like that, it's a sign of reversal for trend. I think it also happened in Boom 500, but that of the live account has closed, but that of the practice account, I don't know if it has closed. Let me check. Is it Boom 5? No, Crash 500, sorry. Okay, can you see this is where I took the signal from? And it got to 23.6. You see it at first, this way. So definitely it is going to come down, because this is what I saw. See, like what I told you earlier on, that you usually see this sign of resistance, then break of structure. That means there will be an imbalance, because when immediately price get up to that level, the first thing I will do is I'll take off the area of interest. After taking the area of interest out, I'll place my imbalance. I want to see if there's an imbalance up here. So at first there was no imbalance. That's why I plotted. Immediately this candle dropped, I put a sell. Before it even dropped, I put a sell. So because I did not put TP, I did it here. I went to live account to trade it. I didn't put P. I think it was $2 profit. So you see, it got to that level. It got to level 23. But being the fact that I did not put TP, it went back. But definitely it's going to come down. On the long run, it's going to drop. It's going to drop huge spike, because this is an area of reversal. Price is going to drop anyway. But if you are doing it, immediately put your TP, because this is a practice account. I didn't put the TP, that is why. So when we go back to Boom 1000, you still see similar issue again. That was similar act. So this price is going to hit up this level, even hit more than that. But and if you check how much it's going to be bringing, that is $6. $6. So with this kind of strategy, if you have $15, you can be trading this strategy and be opening one lot. That means one position. Yes. So at least $15 to $20. All you'll be doing is always watch your chart. Once you notice price is giving you this 0.0, price has crossed below your 23.6. Expect such results. It normally comes up very, very often on any price, on any stock. I love it. This is my major signal I use on step index. Yes, I use it on step index. The result in step index is usually awesome. So Deriv is all about spending time with your chart and look for something that gives you result often and often. So with that, you keep doing it. So let me illustrate it so that you don't come asking for questions. So this is how it is. Don't forget, I told you that I'm going to use a line. We want to see something like this. Let's say this is level. This is your Fibonacci level. The major two levels I'm using. I'm going to draw them out. So for the first one, this but here is around, this place is 23.6. 23.6. Then the next one here is 0.0. If it's for down, this is going to look like that is for buy setup. So the next thing you are waiting for is let price maybe drop. Price will definitely drop like this. Let me change the color so that it will be very clear to you. So you see price dropping, immediately price drop off your level 23. If you drop like this, once price drop like this, the next thing you see is price will make reversal. Once this it make a reversal and come above and close bullish like this, then place your buy order and hold it up to this level. You can just bring a little space down. That means you can put your TP somewhere lower, not at the exact point, just few pips before it approach that area. At the end of the day, you see price doing like, you see price coming all the way up here. If it's going to go beyond, it will definitely, but if it doesn't go beyond, it can just get here, then it start reversing. This signal is very good, but always make sure you use it on a higher time frame, because what you're going to notice is there's going to be an imbalance. There's going to be a free movement of price. You may be seeing price, maybe at this point you may be seeing a key level. When I say key level, you see a bearish candle, okay, a bullish candle and a bearish candle and a bearish candle. So with wicks, they might have wicks or not, so it might get to that area, it will react. It's more or less like a flip area where support is now acting as a wherever resistance is acting as support for sell. In the case of sell, it will be acting as a resistance will be acting as support. So just go through it. But the main thing is identify something like this, like what I show you on boom 1000. You can see what I'm saying, right? You can see that it's approaching that place. So these are the things you should, for scalping. I don't use it for the only time. If it closes now, I will now go to my lower time frame, then I'm looking for a buy setup. So if it gives me a buy setup, I'll take it, then use the high or the low of that buy setup to exit. If you watch the previous video, I've told you how you can exit your trade. You can still use the fib to exit also. So the one that is delaying now is the crash. So definitely I know it will definitely come back, but had it been have closed it here, like, see, that's why I don't do. See, this is what I was saying about key level. You see something like this, indicating that this is probably area of reversal. So when you put your TP a little bit above this area, put your TP. So if immediately I took that sell a little bit, your TP shouldn't get closer to the Fibo level. You shouldn't get closer to the Fibo level. But you see where I extended this one to now, because when I went higher, when I went to check higher time frame, I'm expecting price to drop. If it falls beyond this level it is now, this is where it's coming. That is this level 61.8, because I can see a bullish key level here. That means other block here. So all this one now is more or less like what is it called? It's called liquidity. So price has to come down, test this level, then before eventually moves higher. So there is a key level here. There's other block here, not key level. Bullish order block. All these ones you are seeing are imbalance. telling you that price has to come back to fill all this. But for this strategy, it's just for between 0.0 and 23.6. That's all. That is for this very strategy. It's between 0.0. Make sure that price close. Make sure it close. Make sure it close. So that is just what I want to show you guys today, to add it up to all we've been saying before. So in case you want to scalp, you can use this strategy. And if you try it out, it's working on a particular pair you are scared of, you can apply to that pair so that you don't trade any other thing except price get to those zones. You get it now? Once price break above your 30 level, break above your 23, look for your area of resistance. Something like this will usually come up. There is the one happening in 1000 now. Something like this, sorry. H1. So something like this will usually come up. You can see. It will definitely play them. Sometimes it play earlier in the lower time frame before the higher time frame. So whichever one you catch first, you can use it for it. So that is that for today. Hope you enjoy this, and then if you do, kindly let me know. Cheers, guys.